Welcome to our Momentum Cycle individual cell video. Characteristics of the momentum trade. Are we approaching the final phase of the upward momentum cycle, or is a price correction taking place? Let's analyze the momentum variables. Newton's cradle. In a closed system, momentum always remains constant. The only way to change momentum in a closed system is by introducing an external force. How does this principle apply to financial markets and your trading decisions? Identifying the direction in which an instrument seems to be heading is just the first step. Anyone can look at a graph and determine whether it is trending up or down. Therefore, our momentum analysis is paired with an algorithmic process, and the results are then examined within a quantitative and technical framework to determine where the instrument falls within the momentum cycle. Our primary focus is to align with the momentum cycle of the instrument we are following. This means our starting point is always identifying where in the cycle the instrument currently stands. Once we know whether the instrument is trending upward or downward, we can incorporate leading and lagging variables to determine if a new downward momentum cycle is beginning, which would motivate us to sell, or if a new upward momentum cycle is forming, which would motivate us to buy. It's important to note that even the most stable and high-quality companies can experience a downward momentum cycle, which often presents patient investors with an ideal buying opportunity. The length of a momentum cycle can vary significantly, lasting from a few weeks to several months or even years. Therefore, it's unwise to second-guess a current momentum cycle unless a predetermined set of leading indicators suggests otherwise. It's also important to remember that we're not compelled to buy every time an instrument begins an upward momentum cycle or sell every time it begins a downward momentum cycle. Beginning of the downward momentum cycle. Phase 1. Understanding the beginning of a downward momentum cycle. A stock that is about to start a downward momentum cycle is often still entrenched in an upward cycle. At this point, the instrument would still be on the stay long list since it's moving upward. The time it takes for an instrument to transition from an upcycle to a down cycle varies. During this phase, our leading quantitative variables are scanning the instrument for any fundamental changes in price behavior. There is no guarantee that any instrument will move off the stay long list, so making a trade at this stage could result in an error. Phase 2. Instrument moves to the sell list. An instrument will automatically move from the stay long list to the sell list once it meets a predetermined set of quantitative variables. This allows the trader to properly research the instrument and consider whether any unexpected shocks, fundamental, macro, market, etc., might occur. At this stage, the instrument is placed on a watch list, and sell orders can be set at predetermined price levels or timed intervals. Phase 3. Progression from sell list to negative momentum. At this stage in the instrument's life cycle, it begins attracting various types of traders, day traders, short-term traders, swing traders, etc., who aim to buy and sell based on the recent price action. Common wisdom suggests that if enough momentum is driving a stock price in one direction, it will likely continue moving in that direction for some time. If an instrument's price action starts to gain downward momentum, it could indicate that investors are losing confidence by reducing their holdings and going underweight. Another crucial diagnostic sign for the trader at this stage is whether the instrument is underperforming relative to its peers in the market. The critical mistake traders must avoid at this point is buying too early, as the negative momentum process can last for an extended period. Buying too soon could prevent securing the best price. At this stage, it's recommended to proceed with caution by asking, why is the market selling this instrument? Or, what are we missing in this price action? It's essential to note that if the market is wrong, there will be enough time to buy the instrument later. However, our research has shown that when an instrument moves from the sell list to negative momentum list, the negative momentum often continues for an extended period. Phase 4, the final phase of the downward momentum cycle. As an instrument transitions from negative momentum to the avoid list, it signals that the market is unwilling to continue selling or shorting this instrument. This shift often indicates a lack of market interest. We will focus on Fox Corporation, a media stock that is listed on the NASDAQ. Step 1. Study the graph. Get a feel for the trend and ask yourself, what is the likelihood of a price correction? But more importantly, try to understand why the market has allowed the instrument to reach its current levels. Step 2. Trading variables. Determine the current length of the momentum cycle in days. In this analysis, the momentum cycle has been positive for 111 days. What is the current status of the momentum cycle? The momentum cycle has shifted from stay long to the sell list. The key question is whether the instrument will move downward with the negative momentum cycle or if this is just a short-term price correction. The important contribution of the guided factor. The length of the momentum cycle determines the guided factor. The selected guided factor here is the 66th day, as the current momentum cycle has been positive for 111 days. Step 3. Planning your trading implementation. When planning and researching a trade, we use the variable preceding the recommended guided factor as the point of entry. In this case, we will use the 33-day moving average as our point of departure. Once we receive a research trade signal, we will closely monitor and plan our trade. Once we have confirmation that the price is below the 33-day moving average, we will begin opening our trade. It is always recommended not to open your entire trade on the first day of trading. You will get confirmation that the price has moved below the 33-day moving average when the values shift from positive to negative. Expect increased volatility in the early stages of a new momentum cycle. Remember, there is no guarantee that an instrument will move smoothly from a negative momentum cycle to a positive one. Always monitor and follow your strategies closely. We have come to the end of our basic explanation of an individual's sell momentum analysis. We encourage anyone to visit thetradingforest.com for more educational and trading-related videos and reports. Many thanks for your participation and interest.